Hello everyone and welcome to a new video blog at Elliott Wave Forecast. In today's video we'll be taking a look at Novo Nordisk, NVO. So as you can see here, the structure that we'll be taking a look at is presented on the weekly chart. We can see that the stock been rallying within a strong impulse of structure since 2016 low. So this is really important to understand how this is unfolding at this stage, because the recent rally that started last year did manage to make a new all-time highs, which is creating a bullish sequence from 2016 low. At this stage, this is proposed to be an impulsive 5-wave advance to the upside from 2016, and the more aggressive view that we are presenting for this article is the wave 3 extension higher, because at this stage, as you can see here, we are still seeing a divergence taking place with the RSI during this rally. Of course, you can make always the case that we still have the divergence. This could be still a wave 5. You can always, after the fact, tweak the count, and this could be 1, 2, 3, 4, and this is an extended wave 5 that managed to end the cycle and see a larger correction. But we are looking at the other factor around the market. We know that the entire stock market will remain supported in the coming few months and few years. We know that we have many instruments around the market supporting the idea that the next daily pullback should find buyers and extend higher. So based on those correlation factors and based on the structure that we have here, we expect NVO to remain supported and trade to the upside in the coming few years. Now, the structure from the lows, as I explained it earlier, the first leg from 2016 toward the peak in 2022 is proposed to be the wave 1 in blue here. So ended the 5-wave advance. It did 3 waves pullback, as you can see here, 3 waves pullback in wave 2, and then started a new cycle to the upside. This cycle in the short term is unfolding as, of course, a 5-wave advance. You will be having the potential of ending this cycle that started, technically speaking, since September of last year. This cycle is looking for a target at the equal legs area around 186 all the way to 243. But the initial area where we expecting a reaction to take place and a pullback should be around 186. This is coming from this cycle, the equal legs area with the connector in wave 2. I'll show you here. You take this from here, and that gives you the target to the upside. So the extension from 2016 gives us a minimum target around 186. So we still expect the stock to trade higher toward that area before we see a pullback. Now, depending, of course, on the type of the pullback, you'll be looking later on for a potential buying opportunity if the stock is going to still remain supported as long as 95 is holding. And if the pullback remain corrective in 3, 7, or 11 swings, you can be looking to buy it, depending if this is going to be as presented here with the more aggressive view. A wave 2 pullback should later on lead the stock for another extension within the wave 3, which usually reach the 1618 area, in this case around 243. So that's ideally the target for the wave 3, which is expected to trade higher and, most importantly, erase the divergence that we are seeing here in the RSI in the weekly cycles. Now, we need to keep in mind, of course, when we reach 186, this could be just a wave 3. I mean, the reason we are going for a more aggressive view, as I explained it, is the divergence. Usually the wave 3 erase the divergence, so we are not seeing that happen at this stage. So either this is a wave 5 for the entire cycle from here, which could again create a larger correction, and then the stock will rally higher, or this is just a wave 3, a wave 4 pullback, and again you will get another leg higher. Of course, in this case, if this is just a wave 4 pullback and you get a wave 5, you won't be getting too much extension to the upside later on. It still will remain within this area, which will be 243, 186. That will be still the area to see the pullback. But most likely, with the market looking to remain bullish in the coming few years, we expect this stock to remain supported above 95 as long as 95 is holding, then these pullbacks should present buying opportunity in the weekly and the daily for another extension higher. So short-term upside still expected in the short term, and then the next pullback should be coming from around this area, around 186 to 43, which should present buying opportunity for further upside all the way toward 243 and even above that later on, to finish the cycle from 2016, which later on will create a larger pullback when you finish the cycle. And then there will be another buying opportunity in the weekly to trade the last move to the upside within the wave 5 in the monthly and weekly chart. So I hope the idea is clear. This is just a weekly representation with the more aggressive view. We discussed in previous article that you can check on our website the short-term structure in the daily and for NVO, which is still supporting further upside in the short term within wave 5 within this cycle from last year. So you can always refer to those articles. And in the meantime, we are presenting a more aggressive view for the weekly and monthly cycles that should support the stock in the coming few years. Thanks everyone for watching, and see you on the next video.